Let me begin by asking you a very simple question. If you had the opportunity to invest in the Indian market in 1980, right, 40 years ago, would you have done so? Right, given what you know about the market, if you had the opportunity to invest in 1989, 1988, towards the end of 1980s, would you be interested in doing that? And I think for most market participants, the answer would be yes, because we all know what happened since then. Since then, in 1992, SEBI came into being, mutual funds were launched. But what was the market prior to that? Prior to SEBI, prior to mutual funds, how was it? How was it that people were able to get access to the market? It was primarily through brokers, and the brokers used to kind of, give access. The access was the prime example. So that's how the market was. Well, today I present to you a similar market that is very unorganized, extremely selective, as well as low liquidity, how it was back in the days in 1988, 89 with the main market. So it's called the SME exchange, the SME board, as it might be known more widely. But like you have NSE, cash equity, and futures and options, there's a separate segment on NSE and BSE called the SME board or the SME segment, where smaller companies, much smaller companies, can come to public market with limited compliance requirements compared to a main board company, and access capital markets for from people for investing in their business. So today we'll talk about this market, but we have a ton of research that we want to present. So first we will talk about, it's still a quiet revolution. Why is that? There's a few instances of news headlines on SME, but primarily people are not talking about it, and there are some good and bad reasons. We'll talk about that. We'll talk about the growth story. Why is that? It's a very exciting opportunity in terms of the market dynamic, right? So how is that this market is different from what traditional investors do in equity markets? Definitely we'll talk about the fact that MSMEs, and we all know this very well, that MSMEs are the backbone of any economy, be it India, be it US, be it Japan, the small and medium enterprises, not the very micro, people with about, starting from maybe 50 to 200, 300 people kind of businesses. They are sustainable businesses which for the long term, and they form the backbone. Retail investors can participate in this market. When I say retail, it's mostly semi HNI retail, which when we'll talk about how that access is kind of different from traditional retail access. There is definitely a uniqueness quotient, which means that it's a unique opportunity. There are challenges and opportunities, and we'll drop a vision of how this market could look like 10 years from now, and what have the markets learned through the evolution of this journey. Right, so eight points. We'll keep it crisp, and we have a lot of slides backed by a lot of data that is industry first, which means that we have collected this data from primary sources, and except us, we believe nobody will have this data to show, and we want to present this data on the market dynamics. So it's a quiet revolution. Why is it a quiet revolution? It's primarily because there's very little liquidity in the market, which means that unless specifically, it's very hard to find a good company and then make sure that you have sustained liquidity for getting in and getting out as and when you want. Similarly, this is like it trades in lots, which means that it's not that you can buy one share of SME. You have to buy one lot of SME shares, which is between 1 to 2 lakhs. So it's not something which you can just try with one share and see how it goes, because that's not how this market works. So you have to have some conviction, because it's not a small amount of money that you start with. Hence, it is not really retail, which means that in India, any investment above 2 lakhs is generally considered HNI investment. So it's kind of quasi or almost HNI. And typically, if you're buying these stocks, you have to watch out very closely about the liquidity condition, because we'll talk about some of the dynamics of this market. So in 1980s, right, the main board was at this kind of crossroads. There were very few participants. There was limited access to capital. People didn't have money, like, to invest in stock markets. There was minimal awareness, minimal liquidity. It was mostly a Bombay phenomena where people from Bombay knew about the exchanges because they were physically located. They could go and see what's happening. Most of India did not really participate in capital markets except for Gujarat and Bombay mostly. So it was a proximity-driven business. You remember, when you were children, you had a guy who would come with a newspaper and deliver it at your home. So, access was an important aspect where you needed somebody who could just deliver it to you like a paper thing. Whereas now it's all digital. If you know what you're doing, digitally you can access a lot of things that were very hard to do before. And then obviously now things are moving much faster. Investors are way smarter. They're much more educated. They are ambitious to access higher risk, lower liquidity kind of investments because, there is surplus wealth generation, which is either coming from existing equity investments or, real estate disposals or general, rising income levels. So there's a lot of appetite for higher risk, lower liquidity product, and hence things are moving faster. Let's, look at how different are these companies from the main board. When I say main board, it means basically NSE BSE, and SME is a separate segment. There's a lot of, information. You can review it, pause the video and, go through the information step by step. But broadly, a couple of points from the headline slide is you only need 10 crores of paid up capital to access SME exchange on the NSE, and for BSE, there is no minimum. And you have to be profitable and have a positive net worth for the last 2 to 3 years, 2 of the 3 years. And you have to figure out, 50 people who are willing to invest in your public issue, right? Compared to 1,000 for the main board. So as you can see that you can basically like what we call a typical angel round, right? $2-3 million in the private market these days is, our angel round, Series A's, 10 million. So it's almost like an angel round, but with the additional safeguard of being a listed company, as well as the fact that you have secondary liquidity on an ongoing basis. And when I say secondary liquidity, it's not like the main board where, you buyers and sellers come in. The issuer has to appoint a dedicated market maker. There are 40 of such market makers operating in this market right now, where they're obliged by law to provide liquidity 70% of the time for the next 3 years post-listing, right? So what they do typically is they take an inventory from the promoter and they keep quoting the bid and ask. And if, they have to manage that inventory of stocks to make sure that, if they've sold something, they figure out, another quote to buy it back from the market and so on. So market making is a thing that brokers do. It is the other side of the screen that you see typically from the broker where somebody's quoting the bid ask for you, right? So this is an institutional kind of mechanism in the market to provide liquidity. And typically, minimum allotment size for SME is 1 lakh compared to 15,000 rupees, which is the case of main board in most cases. So as you can already see, it's not for somebody who is a first timer in the market. It is typically for somebody who can do their, basic understanding of how this market works and needs a little bit of knowledge and sophistication to access this market. So broadly, we have to understand who can list on the SME exchange, and why this is an important part of the puzzle is that this will we'll tie this point to the number of potential issues that can come in the SME market and how big this can become. Right? So 10 to 25 crores is roughly what we see, but less than 10 crore is possible for BSE exchange right now. So if you're a company who wants to raise 10-15 crores, you can go to BSE and raise that money from institutional investors and retail investors, primarily in the case HNI retail investors, right? So it gives us access, but more importantly, what promoters tend to do post-listing is they pledge their shares, and against that asset they borrow, because typically promoters are asset rich and liquidity poor. So that means that they have assets that are valuable, but they do not have free cash flow. So they lend these shares to borrow against when they want to kind of leverage up their business. So these are the two main things that the promoters tend to do. Hence, this is how this market is structured. From a stage point of view, right? So we know that startups and early stage companies, they get attention from VCs and angel funds, PE funds sometimes, if depending on the business model. But primarily, public market versus private market is always the decision, has always been the decision for investors. If you go to US or if you go to other countries, there are similar kind of exchanges. The advantage of private market is that you're working with a fewer set of investors. So if you agree on a roadmap, it's easy to convince 2-3 people who are convinced on your roadmap, and you keep working through it as you build that roadmap out. Versus when you go public, there's a lot of scrutiny, there's a lot of disclosures. You have to keep talking about your business prospects. That might not be very good in terms of competitive landscape, because you're always talking about your plans and others can copy your plans in a public space. So some people choose to remain private, but there's also a lot of good businesses that don't need such protections, that can go public and raise money and share that wealth creation with retail investors. So as you can see, if it's the NSE Emerge index or the BSE SME index, you will see that these are companies that can access public markets, that have promoters who are willing to disclose information that is necessary to keep the company listed. But it's also a place where you can easily lose money, and we'll talk about what has happened in this market. So it's a very risky market, but it's also a very interesting market. Again, coming back to the couple of points on, you can read this slide, pause the video, read this slide later when the recorded video is available. But broadly, what we want to share is that there are certain protections that are built into the private market, where you have smaller set of investors. The deals are not public, which means you can raise money with undisclosed terms, undisclosed valuation. That gives you an ability to do up round, down round, and so on. There's an ecosystem of private investors who price assets. So your valuations are tied to those KPIs instead of public market KPIs as price to sales or price to equity or leverage. In the private market, it's usually other KPIs, right? So customer acquisition, what is the ROI, what is the IRR, what is the project outlook, you're building your R&D. So the KPIs around which you run the business are totally different. Hence, what you also see is that small companies that have become large companies in private market, when they come to public markets, they are struggling. They're struggling with PR, they're struggling with reporting, they're struggling with compliance, they're struggling with so many things that they didn't have to deal with when they were private. But if you find a small company which is equally good and are making those disclosures and under the watchful eye of the regulators who is regulating these exchanges, what you get at the end of the growth is a much more compliant business compared to what you could get from a private market transitioning into public market, which is a challenge because the mindset is different, right? So you're getting a pre-trained puppy versus getting a big dog and trying to domesticate it. So growth numbers and growth stories as we speak. This exchange was launched in 2012. Since then, it has had its cycles. So it's gone up, gone down, as you can see in the COVID period, and gone back up again and crossed its peak. But it is, 45% of the listings have happened only in the last 3 years, which means the market has doubled, right, in the last 3 years, which is, and it is not scary because these markets, can grow very fast in terms of issuers and issuances. But what has also happened is that exchanges and regulators have noticed that this is going too fast, and they have increased the level of compliance and entry barrier for migrating into the Mainboard as well as getting into this particular exchange. So, I mean, if you remember back when Apple Store was launched in 2006, 2007, you could just make a very silly app and put it out in the App Store, and App Store would happily accept it because they didn't have a lot of apps. But as people started to use App Store and produce more and more good-looking apps and useful apps, there were many apps that got delisted. There were many apps. The entry barrier to getting it listed on App Store became higher and higher. Same with exchange, right? So as more interest develops, more scrutiny happens. As more scrutiny happens, more compliance is designed. As more compliance is designed, people who stay become more valuable, right? So it's wealth is a business of longevity in all aspects, right? So if you are if you have survived the onslaught of increasing compliance, that means that you are here to stay and here to grow. So that is very important that you recognize this, that these are cycles. The compliance is increasing, and there is more headwind in terms of compliance, but there is a huge tailwind in terms of supply that is potential, and we'll talk about that number. As you can see, the fundraising ticket size has doubled. Right now, people are raising about 40-50 crores per issue versus 1,000 crore for a main board issue. So you can imagine that these companies could become as large as the main board mid companies, small companies, and these are not essentially always very small. So, for example, the largest SME company is about 4,000 crores of market cap. Right? So they started small. They still in the main board, and they can migrate. 325 companies have migrated to the main board, which means of these 1,200 companies that got listed, about 25% migrated, which means they met all the criteria to become a fully listed company in the stock exchange, where you can buy one share compared to a lot of shares. So one lot of share became one share. So obviously it is almost as good as a bonus issue, right? So you're holding 600 shares, and then it becomes tradable, and instead of lot of 600, you become tradable in one share, which is akin to a split. So you get that liquidity tailwind as well. But what is very critical, and this is the meat of the slide, this is the main point of the slide, is the fact that there are 4 crore MSMEs which are unlisted in India today, and about 1% or 4-5 lakhs of it are eligible to get listed on SME platform. There are a lot of merchant bankers, stockbrokers who are kind of coming up and trying to become one of the go-to places for MSME companies to get listed. You need a merchant banker, you need a market maker, which is a broker, you need a registrar and transfer agent, RTA, you need a lead book runner, which is like again a merchant banker. You need a couple of these vendors, or auditor, a marketeer for your essentially your listing. But say if you are willing to spend 1-2 crore rupees, you can get yourself listed. So a lot of these companies are potentially they can list. Usually many of them will not list, because the moment you want to go for listing, you come under a lot of scrutiny, right? You have all the books in place, you have all the compliances in place. Is are you doing business properly? And many promoters might not want that kind of scrutiny towards their business, so they might not want to list. But out of the total 4.15 crore, about 5 lakh are potentially investable, and right now there are 1,200 companies, right? So it could easily be so another 10,000 out of these 5 lakh companies would come into the market over the next 10 years, 20 years, right? So that means that you would see that even if it's say another 1,000, 2,000 companies over the next 5 years, there are roughly 250 working days in a year, so 1,000 working days over 5 years. You could potentially see 1 or 2 listings every day. Some days, 3-4 listings happening in the SME space. That's the kind of tailwind that could happen. Again, we'll have to see what's the appetite for such investments. How many people want to go public? It's a lot of work. It's a lot of scrutiny. Promoters are usually very busy dealing with their own business problems, and unless they're in a kind of a mental space where they want to spend that bandwidth of 1.5 year, 2 year going public. Those are the challenges that promoters face, why they might or might not go public, and hence the potential is there, and it could become a pretty large market in terms of number of shares that are available to be purchased. The index has done phenomenally well. The CAGR of the index over 5 years is 65%. This is just the index, right? So, but you cannot invest in this index. There is no passive product available to invest in this index. All the constituents of the index might not have sufficient liquidity for you to construct a passive product. So this has and will remain an actively managed space for quite some time, because of the fact that it's not a replicable index. It's nice to see that 65%, but you couldn't find a way that you could put 1,000 rupees in this index where it started. Like, so it's just it's there, but it's like a mirage in terms of CAGR, because there's no passive product. So you have to have an active manager who can give you access to this market, do the stock selection, and essentially help you participate in this. Also, if you look at the application to LOT ratio, which is critical, as well as the average size of the IPO. So what has happened is, people are becoming slowly more aware of this segment, right? So from 2021 to 2024, the application to LOT ratio has skyrocketed, right? So which means that for every one share that is available, there was demand for 250 shares, which means that suddenly there is a lot of capital chasing very small issues, and it's almost become like a lottery, right? So therefore, traditionally when such things are happening, promoters are more eager to see if they can also get such kind of attention, but that would draw in more people. At the same time, this is too much, so there'll be moderation of that. So to that extent, it's still kind of a market where extremes exist, and we'll talk about those extremes very soon in terms of performance. And the venture capital parallels are there often, compared to venture capital, because the size of investment, the first check, second check that venture capital funds write, is the kind of issue size for these particular companies. It's a mostly a capital good healthcare information technology market, which means that manufacturing, which India is trying to really harness small information technology companies which have specialist access to few clients who are their mainstay clients, or healthcare, like small kind of healthcare manufacturers, or very exotic business models, right? So for example, one of the companies that are in the SME index is Basilic Fly Studio. It's a VFX company. We recently saw our honorable Prime Minister launch the Wave platform, which is and NSE has launched a Wave index, which basically to focus on media creation and content creation. Basilic Fly Studio is one of those companies that are into the content creation space, where they provide visual effects to Hollywood and external markets, video content producers. Very interesting business model. Just an example, not an investment recommendation, but just to give you a taste of how different kind of businesses that you will not find in the main exchange, which is mostly TCS, Infosys, HDFC, Reliance, these kind of companies, versus what you can find in these spaces. But there are certain gaps. There are, of course, opportunities do not come without challenges. Currently there is no SME focused mutual fund. PMSs provide sporadic access, maybe one or two, the few, and there is no passive index product, right? So this has to be an actively managed portfolio. There's scarcity of instruments, because what I mentioned is that we feel that there's a lot of potential, but that has to translate into actually people coming to the market. When I say coming to the market, not investors like you, but promoters who want to give their shares for listing, that is necessary. And we see this as a huge opportunity, and we are one of the few dedicated we have dedicated resources looking at this universe, which is why we are able to do this webinar for you in terms of broad market research and educating you about this opportunity of the different segment of the market. And broad-based products is an invitation for what is what is possible tomorrow. So if you look at the opportunity, it is definitely very unstructured, a little bit chaotic, but जैसे बोलते हैं ना कीचड़ में कमल खिलता है, तो वैसे ही among things that are hard to reach and potentially you can dirty your hands with, you get some few gems which are hidden in that same space. But one important aspect is stock selection, right? If we analyze the market through special data. So we, for example, what we tend to do is we have access to professional data providers where we can do a lot of very deep analysis on a given opportunity. So we went ahead and did some analysis on the stocks that were listed. So what we tried to calculate was from the time of listing, how much returns did the SME space provide, right? And what was the distribution of the returns? Like, was it very broad-based? Was it like just a few companies dominating the return of the index? What was it like? And what we found is that roughly about 60% of the index would not have returned back your money, which means you had to have very good stock selection to get to a good outcome. And if you look at the top market cap grower, like top compounder, one company produced 300x return, but it went from like 1 rupee to 400 rupees, something like that. So it was a crazy run. But if you look at the top 10 on an average, right, top 10 compounders, that is about 8.8x. And if you remove the top if you remove the top 5 companies in terms of return and you looked at the rest, then it is about 4x in roughly 4x in 5 years, right? So definitely there is if you had one of these top 5 companies in your portfolio and you did a more than average selection, you would end up with a very good outcome. But it's also very, very difficult to keep holding a company when it has gone up 300x, right? So going back, it is very easy to see that this is 300, but imagine you're holding the company, it's up 30x, it's up 40x, it's up 100x. You're very likely to say, this is it, I'm getting out of this stock, I'll find other opportunities, which is not a bad strategy. I'm just saying that I don't think it's easy except for the people who are like unable to sell, to ride this whole 300x, right? And hence it's not a real representation of what is possible. But just to give you a taste of how the return distribution is in the market. And I think the part being that what is the vision, right? Why are we doing this? Why should you look at this market? Currently, the market cap of this whole market is about 2 lakh crore, right? Back in 2012, the average daily liquidity was 50 crores only. So which means only 50 crores of stock traded in the day back in the about 10, 15 years ago. Today, that's 1,000 crores. That's 20x, right? In 10 years, again, it will be 20x. So that will be 20,000 crores. This market, which is at 4 lakh crore, will be roughly 40, 50 lakh crore market, which is as big as, a similar size to the NSE a couple of years ago. So what I'm trying to illustrate here is that if our hypothesis is correct, that there's so many companies that are to be listed as we showed you the data, and the fact that a certain percentage will seek public capital, and there are intermediaries like merchant bankers, stockbrokers who are going after these companies. Even the exchanges, they have their own business development team going to these companies and explaining if you come to the public market, these are your benefits, why don't you do it? And then some will do it, some won't do it. So, but the potential is large. There could be additional 1, 2, 3,000 companies that come to this market over the next 10 years, 5 years. And you would see daily listing, 2, 3 daily listings in this space. So, and India is in general producing wealth and the wealth has to be rotated back. So there's a lot of opportunity in this. There's a proven pathway where roughly 25% of the companies have gone from being one in the less restricted, more in a less compliant space of SME, where you have to file your, instead of doing quarterly reporting, had to do semi-annual, so once in 6 months. That has also been aligned, so even SME companies have to do quarterly reporting now. So there are more compliance coming into this market, which means it's easier for companies to migrate that exist and continue to thrive, and more supply which is yet to come into the market. They will be better quality because of higher compliances. So this kind of makes it a very exciting opportunity for us as well. And I think we will continue to invest our thoughts into this market. We want to show, as we showed you, how this is going to evolve. We'll keep coming back with more and more content, and a lot of the data that I showed you, we have prepared the data from primary sources, right? So there is, please go back to the slides one by one as you process this information, because there's a lot of research that you can find which you will not find elsewhere, because the data is very hard to get. And then we have written a lot of code, we have process technology, we have written code to process this data, put it in a way that is easy to kind of compare and understand. So I would say that keep watching out for this market and keep watching out for more content around how this market evolves as we dig deeper and find specific aspects. Maybe if there's further interest, we can probably do a case study on one of the stocks later. Just let us know in the comments on the video if that's what you guys are looking for, and then we'll put something up there. But definitely do your own research. Definitely understand it's a high risk market, and it's really targeted towards medium-sized investors who are able to invest at least 2 lakhs in one stock, right? So that's the starting point. And yeah, it's going to be an exciting journey over the next 5-10 years, and hope you keep us informed about your experience as we kind of take you through this ride. But thanks for making time, and it was great having you all hear us out and look at the market research that we have done. But we'll bring you more as time passes by. But let us know anything else you wish to kind of see or want us to do. Just let us know, and we can go ahead with that. Right. So I think with that we'll call this sort of end of this webinar. But definitely I think very interesting, right? Very interesting market. And from my perspective, having 20 years of experience, we will kind of look at the market. But I think my team is telling me there are some questions that can be asked. So if you can post your questions on the chat, or Supratim, if you can take the questions and let me know, then we can take some questions. Otherwise, if there are no immediate questions, we can always get back to you after after collecting the questions and doing a follow-up kind of collective question.
There are few 2 questions on the Q&A section. If you could check.
Okay, I'll check. Yeah, so one question is about, can you explain about low-risk super concentrated portfolio? I'm currently invested in value, momentum, and listed venture capital. So it is super concentrated is not an SME portfolio. It's just high conviction for multi-cap portfolio of 4 listed stocks that one represents industrial, one services, one financials, and one broadly consumer, right? So best ideas in those sectors, which is multi-cap. That is what we are doing there. And yeah, in terms of sharing, just let me go through one of the questions. So case studies, yeah, we definitely want to do case studies. I think the challenge is, the main thing is that it's a low liquidity kind of market, right? So with case studies, what we don't want to do is like influence people to go ahead and buy a company where we are researching or where we do not have full conviction. We can do a case study, but we'll come with proper disclaimers that this is just for educational purpose. Just try to understand the things that we look at when looking at an SME company, but do your own research. We as Lotus Dew, we are constructing something. So on the SME space, if you are, so this is from Kunal Savla. He's asking whether Lotus Dew has any small case or PMS offering in SME portfolio. We do have some offering, but this point of this webinar is to kind of talk about the market in general. We'll reach out to you separately to discuss, and then please share details about your small case with smallest market cap stocks. So we have the listed venture capital, which is a mainstay flagship product, which where we look at corporate governance as a stream. We have a product called NanoCap Gems that invests in 200 to 500 crore market cap range. So that's kind of the smallest market cap stocks that we have. Is it possible to launch subscription-based small cases that are focused on SME? And not at the moment. We don't think so. It's not possible to launch subscription-based products. This is a question from Prem Narayan. He's asking, can we make a basket of SME stocks and launch it like a small case or a basket of stocks? It's tough because the liquidity condition is very low. I'll tell you a story, right? When I started Lotus Dew Venture Capital, Lotus Dew listed venture capital, we had a stock called TRF, which is one of the smallest listed Tata stocks. So it did well. I mean, I had invested personally also in that stocks at that time, but it was very difficult to manage liquidity, right? So people would come in and try to subscribe, and it is hitting upper circuit, or it is gone into additional surveillance measures, ASM1, ASM2. There was a lot of challenge when for people to understand that if it's a stock in surveillance, it's still a good investment. Surveillance is a price action mechanism. It has nothing to do with the quality of the company. It is what is happening in the context of price and volume, and it's an exchange kind of way of establishing that it's for legitimate reason, right? So it's not a operator-driven stock. The price volume is real, and people want to buy. So when a stock is breaking out, especially a small company, it can go into ASM, additional surveillance measure kind of limitations. So that way, I would say that we could we basically had to remove it from the portfolio because it was difficult to manage subscription-based flow into that stock, because if it's hitting up a circuit at that time, the small case platform was also evolving, so the curation process of missed trades was not fully developed then. So we had challenges there, so we removed. But for the same reason, I think this is not a product that is something which very retail investors who want to just try out whether being part of small case platform, it might not be possible. But I mean, definitely the platform has done remarkably well, small case. And in managers like us, we benefited from that initial distribution through small case. So maybe in the future, but I think maybe for a specific kind of product, I think that small case guys have to decide. But no, this webinar is more about kind of showing the potential of this market. Can you do a case study on beaten down SME where people won't fall over each other to buy? Yeah, well, I mean, I'm guessing that beaten down means that it's unfairly beaten down, right? So when we want to demonstrate such things, I think we can definitely do. But yeah, I mean, I think more people coming into this market is not a bad thing. But what I'm really worried about is that it should be with proper research, right? It's definitely a scary, difficult place. There's definitely potential to lose a lot of money. I did a complete analysis of the total market. There are at least 20 stocks that have lost 90-80% of their value since listing, and this is not a very old market, right? So 10-15 years may put up as such a lag. So if you're 2 lakhs you have invested, the market probably got delisted. The value is eroded. it's 2 lakhs you could have lost in that kind of process if you're not careful. So yeah, I mean, definitely difficult place to kind of select, but therefore also it has to be actively done. I think a lot of interesting and good questions, but definitely keep us posted about if you have found a company that you want us to research, or if you've if you want more information about any particular company, we can happily help you to see if how does that look. But thanks for tuning in, and see you again soon on this aspect. Bye bye.